basis. So I got a couple of topics to talk about today. Equities and foreign exchange negative correlation. So equities are just stocks, foreign exchange negative correlation. What I mean by that is that the dollar is having a negative correlation with stocks. And this is pretty normal actually, because if you buy a stock, you buy it in dollars. And so the amount of money that you make from the stock is relative to the dollar. And so the dollar goes down, then your stock goes up on a relative basis, right? So that's pretty simple right there. We're going to take a look at those, taking a look at the broad market, S&P, Nasdaq, dollar index, euro dollar, Russell, taking a look at all those. And I got primary, secondary scenarios for all those. Sector rotation, then that's another important one. There's been a lot of money going in tech, and the question becomes, do we start seeing sector rotation out of there? On the bond side, fixed income, we're going to look at bills. Those are just bonds or fixed income assets that mature in less than a year. Notes, those would be 1 to 10 years. Bonds would be anything more than 10 years. We're going to take a look at that. And then on precious metals, we're going to look at gold, silver. Other commodities, we're going to take a look at natural gas and oil. And then we're going to take a look at some implied volatility indexes, the OVX, the VXN, and then our ticker requests for this week: Delta, XLF, XLV, XBI, AMD, INTC, and AXP. So let's start off at the very top with SPX. So SPX, and again, this applies to everything inside that category that you saw. Everything inside this category has a primary, secondary scenario, and they're highly correlated to each other. So I'm actually going to look at the SPX 500 USD. This is going to be the S&P Futures. I'm going to look at it on a one-day time frame. So the question becomes, over the next 2 days, and here's what you got to look out for the next 2 days. Over the next 2 days, we have to have an hourly downtrend confirmed. How do you know an hourly downtrend is confirmed? You go onto the 4-hour chart, and then you look for a 4-hour trend change. A 4-hour trend change would be a high, and then it breaks down all the way to a low. It makes a lower high with a small pullback, and then it continues lower. That is going to be a 4-hour trend change. So you got to go onto the 4-hour chart, and you look for a trend change down. Then you go onto the 1-day chart, and you now know that this is not going to be an equilibrium pattern. This is going to be a high, low, lower, low, confirmed downtrend on a longer term time frame. So we had a high, low, lower high, lower low, lower high. The question becomes, do we get that lower low? I think that is a primary scenario that we do. And if we do, we're headed down to about 3,200. So that's my price target for the S&P. Now, the question becomes, okay, well, if we don't get that, what starts to happen? Well, then you just get an equilibrium pattern. So we have the high, low, lower high, lower low, lower high. And then if this lower high continues further and breaks right here, then you're just going to see a higher low, and it's going to chop sideways in this range before breaking either bullish or bearish. But that would be the expectation. If we continue to come down, the S&P would hit around right here. And it would just hit right here on the monthly, and then it would continue higher. But overall, on the longer term trends, on the monthly, it's simply just a higher low that we're looking for. On the daily time frame, though, we are in a downtrend. And on the weekly, we want to see, is it going to confirm a downtrend and make a bull flag with no bear follow through? Okay, let's take a look at the Nasdaq Futures. Now, we're going to take a look at it on the daily. Now, the momentum here has really died out. I have a database, and this is the thing that many traders don't have. The difference between me and many other traders is I actually have a database that has a certain way of looking at the market that can actually filter through thousands of different stocks inside the market. I can get this big picture view of how many are trending, how many are not, get my own advanced decline lines at my own breadth and such. And so I'm able to look at this from a big picture view. And what I'm seeing is that overall in tech, we are starting to see just a complete, all the momentum is just dead in tech. And those trends, the momentum is falling, the trends are falling extremely quickly. And that's what my database is telling me. And my database is telling me that we will start to see rotation to other sectors. And we're going to start to talk about that. But NASDAQ, the price high is in on the Nasdaq. Best case scenario for the Nasdaq, we just go inside a range. So again, 4 hour, we want to look for a downtrend. Now, if we don't get the downtrend, or we do get the downtrend, but it's all the way up here, then we're just going to go like this. In a range, tighter and tighter and tighter for the next quarter. So for the next 2.5 months, just in a big old range. And this is going to happen to a lot of stocks. This is going to happen to all your FANGMAN stocks, all your Teslas. Tesla, FANGMAN. FANGMAN is Facebook, Apple, Netflix, Google, Microsoft, Amazon, Nvidia, and then you could add Tesla onto that list too. All of them are going to be in a situation, best case scenario, where they just go sideways like this for the next quarter. And you can short Tesla and go long Tesla, and Tesla is going to be a really good trading stock, meaning that it's going to be in a range, and you can buy it at the lows, sell it at the highs, short it at the highs, cover at the lows, just in this big range. And that's probably what's going to happen to all the tech stocks. And you can call Tesla a car company if you want, but the market treats it as if it's a tech stock, and it is part of the Nasdaq too. So that's what's going to happen largely to the tech stocks, is that the secondary scenario for me is that they go into this big old range from here on out, where they just go up and down, up and down, up and down. And it starts to become good for premium selling traders, and it starts to become good for range-bound range traders. But it is not trending anymore. It's not an investment. You don't just buy and hold it for like a year like you used to with Tesla, where you would go a year back and you just buy it and you'd hold it for a whole entire year. Now it starts to become a range-bound stock, and it starts to consolidate for a long period of time before making a big move. That is the secondary scenario. What's the primary scenario, though? What if we do get that 4-hour trend change? Right here, we get a 4-hour trend change, and that's the important thing. I'm recording this on about 6 in the morning Eastern Time, Thursday, September 10th. What we need to see is over Thursday and Friday, we need to see some sort of 4-hour trend change. If we do get that 4-hour trend change on the Nasdaq, what we're going to start to look for is we got the low, or we got the high, we got the low, we got the lower high, and then we got that 4-hour trend change that's going to push this lower, bear break below this level, and then we continue to lower lows. That is a confirmed downtrend. So then what do we look for on a longer term time frame? So then we're going to zoom out onto a longer term time frame, monthly time frame. So actually go onto the weekly. So then we're going to be going from here, high, low, lower high, lower low. What's the next target then? Where does the Nasdaq possibly flatten out or bottom out? I would say at the previous all-time high. Right here in this area, the main problem is that we have so many gaps. Gaps on the chart are not good. It means that you have poor structure. The Nasdaq has extremely poor structure because it's just gone up so quickly that it did not create proper structure on the way up. Because of that, on the way down, it's going to go down very quickly. If it does, and this is my primary scenario, if it doesn't, I just showed you before the secondary scenario, if that 4-hour trend change does not happen. But if it does, I would say the last all-time high at 36.92, spot 75, that right there should hold. Because below that, we do have strong structures. Just above that we have weak structure. But that would be my next target for the primary scenario. If we don't get that 4-hour trend change, or we get it too late, then I would say just chopping sideways for the next quarter. But after we do this, on the monthly time frame, let me remove this drawing right here. On the monthly time frame, what should happen is that we should just get a low, high, and if it pulls back enough, this could just be a lower high, higher low, lower high, higher low, and we could actually be in a consolidated phase for the next quarter to 2 quarters where we just chop sideways. But overall, I think that volatility is too high in the Nasdaq, and that either way, we either go through the primary scenario, which I just showed you, or the one that I showed you before that, which was a secondary scenario, if it doesn't confirm that 4-hour downtrend. But either way, we're in a situation where we got to see some sort of sideways choppiness. Either we see it on the daily time, either we see it on the weekly and daily time frame, or we see a downtrend confirmed on the 4-hour. We continue to lower lows, and we see it on the monthly time frame. But this thing has to consolidate, and the momentum has really died out on the bullish side, and so now it's probably going to fill all of those gaps, fill all of those VPOXs, all the way down to the last all-time high from last February, and then chop sideways from there for probably, I'd say, at least probably a quarter, It could even possibly go out to 2/4. But this makes it really nice. Now you can actually go out, you can trade the FANG stocks, trade Tesla, trade the Nasdaq. You don't have to just buy and hold it bullish. You can actually trade it long and short on both sides. Okay, before we get into DXY and Eurodollar, let's go look at the Russell. So the Russell is the weaker of the two. I would say that long term, it is in a downtrend, and so there is divergence. And this just shows that the Nasdaq is primarily tech worldwide, and the S&P is mid cap, but still it's weighed on worldwide. The largest holdings in the S&P are still worldwide mega cap type companies. What I would say is for the Russell, it's largely smaller cap American companies that are more industrial, that are more old age. They don't have as much tech, right? And it's all older industrials. And what this really shows is that long term, older American industrial companies are starting to struggle. And we've known that for a long time. We've seen, steel workers get laid off and such. This is just a showing of that. And so, longer term, there is divergence. It is not in a strong uptrend. I would say if it does go up, my target is 1700 up here at this trend line, close to all-time highs or so. And then we would, of course, look at that trend line and see whether it's still valid. Looking on the 4-hour, again, same thing right here. We've got to see some sort of, let me actually go into RTY, which is going to make it easier because of futures. So on RTY, we've got to see some sort of a 4-hour, I would say 4-hour downtrend confirmation, which we're already in the process of actually starting to see right here. Got the high, low, lower high, lower low, lower high, lower low, lower high. Got to see a lower low, but it does seem like it's going to make that lower low. That means on the daily time frame is that, let me actually go on to the weekly. You can see it a lot better on the weekly, is that we start to then come down. And then we start to hit the next value area, which should be around right here. And I'd say that around 1344, we start to bottom out. Now, what does this mean for a longer term time frame? Let's go on to the monthly. 1344, so somewhere around here. So basically, we're getting an equilibrium. We're getting a high, low, lower high, higher low, lower high, higher low. A lot of equilibriums. I told you there's going to be a lot of correlations, but I'd much rather be long the Russell and short the Nasdaq in a pairs trade. The Russell is far more likely to break bullish. What we're seeing is that the Nasdaq is extremely weak. The Russell is actually holding up very well. So what if we get a situation where the Nasdaq actually bottoms out at those all-time highs, those old all-time highs like I told you, and then we could see the Russell go up 5% a day, right? And we could see massive momentum right there. And so that starts to become what we're talking about, is that we can actually see the Russell and other sectors start to lead tech. Okay, let's talk about the dollar, and then we're going to talk about Eurodollar. Okay, so on the dollar, let's go on to the 1-day time frame. The question starts to become, we had this bottoming pattern and a loss of momentum. We've seen that. You would have been short based on CCI, and then right here you essentially would have covered, and you would have seen that loss of momentum. Then every time momentum tried to come back, it failed. And this time we actually had upward momentum. And that might actually continue. And the slope of the moving averages has completely collapsed. So, based off of all that, what are we going to see in the dollar? Well, here's the main thing to watch out for. Primary scenario, high, low, or actually this is going to be the opposite. It's actually going to be a complete opposite. It's going to be a negative correlation. So it's actually going to start from a low. So it's going to be a low, high, higher low, higher high. If that happened, that means further downside for stocks. That is my primary scenario. What is my price target then? Well, my price target would be to look up right here at about the 95 to 96 handle on the dollar. Because there isn't a lot of resistance right here when you fall this quickly. And so that's what I do, is that I look up right there. That's my primary scenario. Now, what if we don't get that sort of a trend change? What if we continue to go down, we don't get a 4-hour trend change like I've been saying? Well, then what's going to happen is we're going to have our low, we're going to have our high, we're going to have our higher low, lower high, higher low. Look how we're having a lot of these equilibrium tightening range patterns. And that would be my secondary scenario. So less likely, but it could definitely happen. But we have to watch for that 4-hour trend change Thursday and Friday. Again, I'm recording this September 10th. Thursday, September 10th, 6 in the morning. It's 6:26 right now, Eastern time, and that's really the main thing we got to look for. Thursday, Friday, trading. That's what we have to look for. Do we get that trend change? That is the main thing. The 4-hour trend change on all of these extremely correlated assets. Let's take a look at Eurodollar. Now, Eurodollar literally looks like the opposite, right? It went down and now it's starting to bounce. It is quite literally the opposite, and it is correlated with stocks negatively correlated with the dollar, hence why it is Eurodollar. Now, if it was dollar-euro, then it would be positively correlated with the dollar index, but it's Eurodollar, so you're seeing how strong the euro is. So right here, looking at this, we got let's actually zoom out a bit. So, came up with the bullish price action. That was after the Fed essentially said, we're not going to let go of inflation. We can let inflation run rampant above 2%, Fed balance sheet expansion, all that. But the Fed oftentimes does this. It's called Fed speak. And that's when the Fed comes out and they say something, but they never execute on it. And that's really what's happening. It's all bark, but no bite. They're saying something, but it's never going to follow through. And the markets realize this pretty quickly. And so with the euro, we have a situation where we got a high, low, lower high, most likely scenario, we confirm and we get a lower low. Now, what does this mean on the 1 month time frame? On the 1 month time frame, you can actually look at the 1 month for the dollar. It looks like the complete opposite. That means that we got a low, high, and then if we do get that lower low on the daily, by seeing that 4-hour trend change, then that means that we continue to slide, and we probably get all the way down here. And then we get up here, and then we get down here. And we actually just get into this very tight range on the Eurodollar. And then let's take a look at the DXY on the monthly. It is, as I said, the complete opposite, essentially. The two have a very high correlation. Then you would have a situation where you got a high, low, lower high, higher low, lower high, higher low, and it just goes tighter and tighter and tighter. But they're all highly correlated. My primary scenario is that we do see the 4-hour trend change over the next 2 days, and then we confirm downtrends on stocks, confirm downtrends on Eurodollar, confirm uptrend on dollar index, and we see follow through higher on the dollar index, lower on Eurodollar, lower on stocks before bottoming out. And so those things are highly correlated. Something to look at right there. Sector rotation, IJR divided by NDX. Let's look at this on a weekly. We've seen a loss of momentum. So this is measuring the IGR, which is small cap, largely industrial companies, versus the Nasdaq. So we literally took IGR, we divided it by the Nasdaq to look at both of them in a pair. And we're starting to see that the IGR is really starting to have momentum. I would look for the momentum indicators. Just one small push right here brought the momentum indicators out. And another small push we just need to push up here, and this could bring these momentum indicators into a bullish state. We're seeing a lot of momentum run into IJR, and IJR, when the market is falling and is crashing, and the NDX goes into a 12% correction, essentially, IJR was down a slight bit, but it was largely unchanged. It was like a normal day for IJR. While the NDX, it was absolutely crazy when it was inside a crash. And so for that, I would expect follow through on the upside. But these trends are longer term. Again, we're looking at a weekly time frame. It's been chopping sideways for weeks and weeks and weeks and weeks. Essentially since, I'd say, the bottom was in July. But really, it's been grinding down from here on out. It's a hard call to make. I would say it's a longer term call to make. But this is a bottoming pattern. And I do expect sector rotation out of tech, as I said. Fixed income, bills, notes, bonds. Okay, bills, not too much going on as usual. Bills don't move much. They only move when there's a big liquidation event like there was in March where bills moved up a lot. But for the most part, bills never really move. But we're seeing bills flat. As always, bills don't move a lot. Bills are literally, they give you money in 3 months. So your money's not going to change much in 3 months. Or it isn't going to be too volatile, so it doesn't move a lot. Unless there's a liquidity event like there was right here in March, or there was in 08, where the bills went a lot higher, where everybody ran to the dollar. But unless you have a liquidation event like that, you should be fine. Notes. So we're starting to see with the notes on the daily is that we are seeing or this is actually the bonds right here. Let's take a look at the bonds first. We're seeing a downtrend on the daily, and I do expect bear follow through. There has been a loss of momentum, high, low, lower, low. We've been tightening into this wedge. This is tightening wedge, and we either got to break bullish or break bearish. My scenario is breaking bearish because of the higher inflation expectations, and what we're starting to see is that even though you're going to say, okay, but the dollar is strengthening, so what do you mean higher inflation expectations? I would say, okay, but the bond market doesn't care about what the dollar is doing right now. It cares about what the dollar is going to do in 30 years when you get your money back for that bond. And that is why for the bond market, there's going to be a divergence where bonds are going to go down, but the dollar can actually go higher. And that is the reason why, is because the bond market is looking at what happens to the dollar 30 years from now, not what happens to it right now. And so because of that, we would likely see bonds go lower. For notes, we would see them go lower. Notes would be ZN. We see notes go lower, but not as low. So what we're seeing right here, as I just showed you, is that bills are unchanged to slightly up. Notes are down slightly. Bonds are down a lot. You know what that means? That means that you got a yield curve steepening. You have bills which mature in 3 months, notes which mature in 10 years, bonds which mature in 30 years. You're literally seeing the yield curve steepen. And so the reason you're seeing on the long end of the yield curve going down, but the front end of the yield curve staying stable and going up is because the dollar, spot dollar, is going up. Shorter term, longer term, though, inflation expectations are heading up. And so because of that, you're literally seeing the whole entire yield curve flip. You're seeing the front end of the yield curve go down, which means yields go down, bonds go up because they trade inverse. And then the long end of the yield curve is going up, and because fixed income trades inverse to its yield, the fixed income asset goes down. But that's what I'm expecting. We continue to have a position right there. Okay, precious metals, XAU USD, XAG USD. Gold, again, expecting it to continue sideways, just chops sideways like this, see some resistance, and we'll probably see this break in another 2 weeks. Similar thing with silver, expecting it to chop sideways, continuing to chop like that sideways. Really not much action going on. No good risk reward on either side, long or short, on silver. I'd say continue to chop sideways. If you want to trade it, use some premium selling strategies. Maybe use some condors, iron condors, things like that. Okay, other commodities, natural gas. So for natural gas, we do have a bearish trade out. So far, the bearish trade is going good. What we should see is that we should see some sort of weekly consolidation, because we got a low, high, and then we had a higher low, and just chopped sideways for the higher low. And that's actually quite bullish. Correction with time is more bullish than correction with price if you're in an uptrend, or if you're trying to confirm an uptrend. And we had a big bull break to higher highs, essentially, like 60%, and then now we're having that pullback. I think the pullback comes to about here, and then we continue higher. That's my primary scenario. My secondary scenario is that we come down like this, and then we have that tightening range. Get used to tightening ranges. They are the most popular chart pattern you will ever see. But my primary scenario is still playing out until we see some sort of a trend change. I'd say since we're looking at this on the weekly, we'd have to see some sort of a trend change on maybe like a 12-hour time frame. Okay, implied volatility indices, OVX. Or actually, let's take a look at oil, then we're going to look at OVX, which of course is the oil volatility index. So oil, CLV 2020. So with oil, we're starting to see some sort of a bear break, but we're not seeing much follow through. So let's go on to the daily. Now we did see a bear break. Now the question becomes, do we see follow through on it? From a fundamental perspective, my oil fundamentals are saying yes, we should see oil go lower, probably down to $20 or $30 a barrel. Then from there, we should see it go a lot higher, $60 to $70 a barrel. And I can talk about that at a different time. But From a purely technical perspective, we should also see something similar to that as the most likely scenario. The most likely scenario is such that we get that high, low, lower high, low, or high, low, lower high, higher low, not a confirmation of lower lows, and then we just go in a sideways range like that before breaking bullish or bearish. And so that's my main proposition. Now here's the thing. Oil has been a bit tricky to trade. We've seen a lot of times where oil has come down, come up, come down, come up, essentially since June. Since June, we've just seen a situation where it's come up and you think it's going to go higher, but it didn't. It came down, you think it's going to go lower, but it didn't. Came up, you thought it was going to go higher, but it didn't. And it continued to do that, continued to fake you out. The question becomes, are we seeing the real downturn right here? Where we got that high, low, lower high, barely got a lower high, which is really weak for oil, and then we're seeing a big crash. I would say I would lean more on the side of we are going to see a crash in oil. But that's really all we have right there for oil. I would say I'd lean more on that side that we are going to see a big crash in oil, but simultaneously, I would say it's not a high conviction trade, really. When I'm looking at this, I'm not highly convicted simply because we've got every single time it's broken support, broken support, broken support all along right here. What says that's not going to do it again and then it's just going to come back up, right? One thing that I do want to be, though, is that I want to be long oil volatility. So oil volatility, we saw it spike up, right? To well over 500, but right now oil vol is sitting at 50. 50 is pretty normal oil volatility. If you can catch oil vol this low, of course we did see a pop in oil because of that big move, but oil volatility, and the way that you catch oil volatility is that you buy straddles on front month oil. So we got that low, high, higher low, most likely scenario higher high. You could possibly see it come down and do an equilibrium. But there's a lot of correlations in this market. Again, you guys are seeing a lot of equilibriums, a lot of trend changes, because oil, of course, is correlated with the stock market, and oil volatility is inversely correlated with oil. But we got to see if that bear break gets any follow through on oil. If this bull break on oil volatility gets follow through, I bet though it would. At some point, I do want to try and get in. If we get to that nice sweet spot in oil, I would like to get in and get long oil volatility, possibly buy some straddles or double back spreads. Okay, VXN. So this is vol, but for the Nasdaq. And what we see is Nasdaq volatility popped up. Now, one of the main things I said is that either way, we either don't see that 4-hour trend change on a shorter term time frame, and if we don't see the 4-hour trend change on a shorter term time frame, then we continue to go higher, and then on the shorter term time frame, we chop sideways, and we don't see a lot of volatility. Or if we do see a 4-hour trend change and continues to go lower, then in the short term, we do see a volatility pop. But afterwards, when we reach that area of support, we should just see a choppy sideways range, and oil or Nasdaq volatility should go down quite a bit. My target for Nasdaq volatility would be a lot lower, down to here at around 26. So either way, one of the things I want to do is I want to be short volatility on the Nasdaq. The Nasdaq has reached its price high, but the previous all-time high from February will likely act as a price low, and that it will likely chop in a range. That's my primary scenario. Secondary scenario chops in a range, but for not as long on the daily time frame. But that's really the thing that we got to look for right there. But I do expect volatility to come down the Nasdaq. You can bet on that by using any sort of premium selling, extrinsic collecting type strategy. Okay, our position tickers. Let me actually take a look at our position tickers. I forgot to write them down. And I just want to take a look at them so you guys are on board for positions that we have on. So the first one is CCL, Visa, MasterCard, and we already talked about a lot of these. We got a long-term one on XLF, although I think XLF is already one that was requested. And a lot of these we already talked about. Yeah, I would say most of these we already talked about. The other one is Jets. but we're likely going to take that Jets trade off for something close to break even. So let's take a look at CCL. So taking a look at Carnival, we're starting to see a bull break on the weekly. So on the weekly time frame, what we're starting to see is that we got that low, high, higher low, higher high. We're going to see a pullback to higher lows. We're going to go to higher highs. And my next target for Carnival is that we get all the way up to right here at $25. That's my next target for Carnival. We continue to go up over the weeks, over the next month, month and a half, and we get up to $25. At that point, I'm going to reassess it and see whether it breaks its resistance or not. If it does, then we continue higher to right here. And if it breaks that, then we continue to all-time highs. And we see whether that is resistance or not. But if it really gets above this level, then it's just flying a lot higher to this level. If it gets above that, then it's also going to all-time highs. But my next target would just be 25, spot 5. Visa. So what we're seeing is we got a low, high, higher low, and then we're starting to get to higher highs. And so I would say my next target for Visa would be $215, and I expect it to get to that target. But we got a trade on Visa. We're up on that trade, and we'll continue to do that. Again, for that trade, we're just buying verticals, selling verticals against it in a calendarized butterfly. MasterCard. Similar thing right here, although it broke out of its consolidation before. Low, high, higher low, higher high. Probably going to be in a choppy sideways range because we're going to see another equilibrium. We're seeing a lot of equilibriums. Again, once you guys see them on a chart, you guys just never forget them because they're the most popular chart pattern you're going to see. So you got that. You got the higher highs, and you confirmed you got a higher low, and we went from here to higher highs, and then we had a higher low, and then a lower high, and then a higher low. My most likely scenario is that this chops sideways. The less likely scenario is that we just break bull. I don't think we're going to see that, but it's the secondary scenario. We could see it, but it's less likely. Jets. Let's take a look at this one. Okay, on Jets, it's a lot weaker than I looked at like something like Carnival, but similar thing, low, high, higher low, higher high, trying to make a weekly higher low is going to break bull to higher highs. All of these names, CCL and Jets and any other airliners, cruise liners, financials, they're all highly correlated because they're all what we would call the laggard sectors, but what I think will start to become leading sectors. AXP, American Express. Okay, right here, my next target would be, we got a low, high, higher low, higher high, higher low. Next target would be up here. Other than that, not much going on. This is another one of those laggard sectors. Really not much going on here like we did inside the others. Price target would be 112.48. Intel's one that I think has just had a price low, so this might be a good time. If you're a long-term holder and you want to hold on to a core position for 6 to 18 months, Intel might be that. So let's look out on a 1-month time frame. Really just chopping sideways, not much to look at. 1 week time frame, had that bear break, lower high, no bear follow through though, and that doesn't surprise me because on the monthly time frame there is never bear follow through, no bear follow through, no bear follow through, no bear follow through. So it doesn't surprise me that we didn't get bear follow through on the weekly time frame. What I'd be looking at right here though is I do think we've got a price low. I think that this is a price low right here, and it will continue to be the price low. The question becomes, do we fill this gap? And right now, so far, we have not filled this gap. If I were to buy this stock, I would not short it. There's far better short place inside this market. And on top of that, the fundamentals are so healthy, I don't want to short something that's trading for such a cheap valuation. But what I would look for is that I look for it to break this level. Click right here on this. I look for it to break this level and then retest, and I'll buy on the retest before it went higher. And the reason it would break that level and retest is because you have to break bullish, and then you have to have a higher low and then confirm with a higher high. That's why it almost always retests any support or resistance levels. Okay, what do we got? We got AMD, XBI, XLV. AMD is a completely different chart. There is an opportunity for a long-short equity pair trade where actually short AMD, go long Intel. AMD looks very similar to everything else inside the Nasdaq. It's highly correlated. I would put it along with the Nasdaq. Really, you can put things in a couple of places. You can put things in the leading sector, the lagging sector. The AMD was part of the leading sector, as part of the Nasdaq. And then you can also put things aside the dollar area, whether they're correlated with the dollar or not correlated with the dollar, and then some of them are just on their own, like Intel. But with AMD, on the weekly time frame, we did break bull. We're going through an equilibrium right now. So I'd say on the daily time frame, what I'd want to look for if I was a bull. Well, let's actually go over if I was a bear first. So we got that low, high, low, lower high. I would want to see a situation where we got that high, low, lower high. We confirm, we go to lower lows. That's what I want to see. Now, do we see this? Maybe we do, but I need to see that 4-hour trend change. Now, what if we don't see a 4-hour trend change? I think we'll just chop sideways like this, and then it's going to be turned for the bulls. They're going to take it. But I think the price high for AMD is in, though, so I don't think there's much opportunity for bulls. But if we don't see a 4-hour trend change, we might just chop sideways. There might be an opportunity for some bulls, maybe to sell some puts. XBI, XLV. This is the biotech sector that we're taking a look at right here. One of the bullish things that we did see was that it did not bear break as much. We have a big value area up here. And so my expectation is that we hold support on XBI, that we hold this sort of support right here from the previous all-time highs. Put it back here. That big old support used to be previous resistance. Now it is acting as support. I would say we hold that support, and I would look either sideways to trade the ranges, or I would look if we do see a bull break above that level. But until then, that's my next price target is $120. XLV, and then we're going to look at DAL. XLV, this is the financial sector. Again, this is a high correlation with the cruise liners. They're all laggard sectors. I'm seeing choppy sideways action right here. What I'd like to see on the weekly is that we saw a low, and we saw a high, and we saw higher low, higher high, higher low, higher high, higher low. What I'd look for is I'd look for a break above this level, above 25, and then if we get a break above 25, my next price target would be 27. If we get a break below 24.30, my next price target would be down at 22. Right now, though, there's just a premium selling opportunity. Just go out and sell premium. Not really a directional opportunity. If we break above 27, then we're going to head all the way to all-time highs. If we break below the bearish support or the support area, if we break bear, then we're going to go to the March lows. And that would be the financial sector. Let's take a look at Delta. Low, high, higher, low, higher, high, higher, low. My next price target is 37 for Delta. The airliners look a lot better than the cruise liners simply because airliners are fundamentally supported by the government. Most of these airliners are American airliners, and so they're supported by the American government. Cruise liners, though, they tend to be overseas, and so they don't get bailouts in the same way. They don't have the same sort of safety net. And so Delta looks a lot better, and those fundamentals are playing out in the airlines versus the cruise line, because most cruise lines make their flag on their ships from overseas, and so they're usually under Liberian flags, Bermudan flags, Bahamas flags, something like that, but not an American flag, so they don't get bailed out by the American government. And so that is a downside, though, if you're a shareholder of those cruise lines that you don't have inside the airlines, because the airlines do have that safety net of getting bailed out. So that's all for this week, at least in this video, it's all. I will release another video this week, and again, if you guys are listening and you guys are not a part of Alpha Action's pre-market wrap, and you guys are listening for a sample video, because I will release this as a sample video, the educational video I'm going to make on long-short equity, that is only going to be available to you if you are a part of Alpha Action's pre-market wrap. Link in the description below, pinned inside the comment section. Become a part of Alpha Action's pre-market wrap. We're giving a free trial right now, everybody, and the free trial is going to end pretty soon, so you guys want to be a part of it. Link in the description below. pinned inside the comment section. You guys can get access to this sort of stuff, ticker requests, weekly videos. This is one of the weekly videos I'm going to make. I'm going to make another weekly video for an educational topic that only the members get access to, and then also talking about trade alerts that we're going to give you largely through options, and then answering all your questions on top of all that, and so much more. So if you guys want to join us, link in the description below, pinned inside the comment section. Again, this is a sample video of a larger series of videos that I'm putting out on YouTube. Let's also put out to our members, and if you're watching this on YouTube, this is simply just a sample video. If you guys really want the whole thing, you guys want the other video that I'm going to release this week, then make sure you guys head on to Alpha Action's pre-market wrap, and you guys subscribe. Thank you for watching, everybody. Stay safe, stay profitable, and happy trading.